Hi folks, welcome back to the channel. I've taken a much needed mental health break and I've been off YouTube for a while, and if you've stuck with me through that, I wanted to thank you, especially the members for my Patreon, for being so understanding. So let's talk about China. The tone of this video is going to be a little bit different from my videos in the past. I don't generally do alarmism, and I try to present a calm, rational view of events in the financial world. While being calm and rational doesn't pay very well on YouTube, I do believe that an approach like mine, though, is a necessary counterweight to the absolute avalanche of BS that you find here on YouTube. The time has come, though, to break with channel tradition and to sound an alarm. We need to talk about China. Chinese property developer Evergrande has filed for Chapter 15 bankruptcy protection in the U.S. China's debt crisis, sparked by the property sector, is really a symptom of wider systemic problems in China, and it's making investors nervous, and they should be. The world's second largest economy is faltering. The Hang Seng Index is in a bear market, and large Chinese company stocks have fallen across the board. China may be about to have its Lehman Brothers moment, but that doesn't even scratch the surface of their deep systemic challenges. The country's commercial debt crisis has been on simmer for the last 2 years and is now starting to come to a boil. China's bank sector is starting to default on payments. As the world's second largest economy, investors rightfully fear that an economic slowdown in China could spark another global recession. The Chinese government says it has things under control, but the Chinese government is a large part of the problem. Beyond the current commercial debt crisis, there looms a much larger crisis in the form of debts assumed by local and regional governments in China. 3 years of strict pandemic controls in China and a real estate crash have drained local government coffers, leaving authorities across the country wondering how to make payments on mountains of debt. The problem has gotten so extreme that some cities are now struggling to provide basic services, and the risk of default is rising. Analysts estimate that China's outstanding government debts surpassed 123 trillion yuan, that's $18 trillion in 2022, of which nearly 10 trillion is so-called hidden debt owed by risky local government financing platforms that are backed by cities or provinces. The fact that the predicted post-lockdown economic miracle hasn't materialized to solve all problems has exposed this ugly secret at the heart of the Chinese economy. So what's the big deal with Evergrande? Evergrande filed for protection in the U.S. under Chapter 15 of the Bankruptcy Code. Evergrande's debt is mainly held by Western investors, hence the filing in Manhattan. Evergrande has been at the center of the Chinese property sector's debt crisis, which first got attention in 2021 and has roared back this summer. 2 years ago, Evergrande defaulted on making interest payments on bonds, which sparked a set of failures across the Chinese property sector and threatened the whole Chinese economy. Like a zombie apocalypse, the infection has spread. The largest property development companies across China, accounting for roughly 40% of China's home sales, have now defaulted on debt since this crisis first began. This has led to unfinished homes and ghost cities, supply chain disruptions, and institutional investors losing large bets, and tens of millions of individual aspiring homeowners holding the bag as these development companies fail to deliver on their promises. Evergrande is not the only property developer struggling this week. China's Country Garden Holdings is also looking to restructure its bond payments, totaling $535 million over 3 years to stave off financial crisis. Given that real estate is estimated to make up 30% of China's GDP, the fears that contagion in China's zombie real estate market could spread and create a downward spiral of depressing economic growth across the wider economy are very real. There are worrying signs that the crisis is growing beyond the control of the government. Last week, there were rare protests in Beijing after bank subsidiary Zhongrong defaulted on several investment products without immediate plans to repay its clients. The parent company, Zhongji, manages about $138 billion in assets, 10% of which are exposed to the real estate market. The increased amount of defaults from property developers raised Chinese banks' non-performing loan rate to 4.4% by the end of last year. That's up from 1.9% in 2020. So increased risk of default plus increased borrowing costs due to higher interest rates make any proposed solution to the banking crisis more expensive. And this is before the local government debt crisis is even addressed. China's property sector is considered the world's largest asset class, worth around $62 trillion. The Chinese government will intervene as economic growth is the Chinese Communist Party's modern-day mandate of heaven. China is likely entering a deflationary spiral. Consumer prices fell for the first time in 2 years in July. The Chinese yuan has slumped in value, and house sales have fallen 6.5% in 2023. The unemployment rate for young Chinese workers hit 21.3% in June. After that, the Chinese government stopped sharing figures. The Hang Seng Index in China has officially entered a bear market. Around half the stocks on the index are now oversold, and it's lost 11% of its value in August. The fear has spread to U.S. markets, although this might be a bit overblown unless you are personally tied to significant Chinese investments. While it is true that the rest of the world can be infected by a recession in the U.S., the reverse has never actually been true, but there is a first time for everything. The bottom line is this: China has had deep systemic economic issues for decades, and they've been able to stave them off for a while, but it's coming to a head. While the debt crisis in the property sector is dominating headlines, the slowdown in economic activity after lifting COVID restrictions and higher interest rates has made a bad situation much worse. In the coming weeks, we could see more financial institutions default on their debt obligations and likely see Evergrande collapse into bankruptcy without government intervention. Beyond the banking debt crisis, the crisis of debt in local and regional governments still has not been addressed. And further beyond that, China is dealing with a wave of popular discontent, which will be hard to pacify. Youth unemployment is extremely high. Working conditions and inflation have eroded quality of life. China faces a massive demographic challenge with a rapidly aging and shrinking population, and they don't have the gains in productivity per capita to make up for the loss of economic activity. China is likely in for years of economic challenges as their population ages and shrinks. A series of debt crises will have to be addressed with a weakening currency, poor geopolitical calculations and alliances add to trade burdens, and manufacturing begins to move out of the country due to the massive increase in labor costs in China and increasingly onerous regulation. We may actually be in the last years of China being the beating heart of the world economy. That's it. Thanks for watching today, folks. Please like this video and subscribe, and I'll see you next time.